Hey everyone, welcome to another episode of InvestStream. I'm Pankaj, and today I'm going to talk a little bit about what I look for in an angel investment. Coming up next. If you haven't yet subscribed to my YouTube channel, please hit the subscribe button and don't forget to hit the little bell so you get notifications about every single new episode that comes out. A lot of us talk about traction. We want to see companies with traction, and the founders always ask, what do you mean by traction and what kind of levels of traction are you looking for? And the answer is, I don't know. It differs. It's very contextual, right? The answer can be a couple of B2B clients, potential clients that are testing out a product, or it could be tens of thousands of users for a B2C product. And it could be anything in between, or it could be something completely different. The thing that I care about, that I want to see, is some sort of repeatable and replicable process for acquiring those customers or those users. And I want to see momentum behind that traction that you do have. So, for example, if you launched a pure B2C play recently, and it took you about 3 months to get to 1,000 users, okay? You figured out a process, you saw that it started working maybe a little bit slowly initially, and then it ramped up, and you got some momentum in the last month. You got to 1,000 users. You diagnosed the process that you used to get to these users. You have figured out engagement and how to get some of those repeat users coming back. Great, wonderful. Now, at the next stage, you say, all right, we've got out of the gate 3 months. In month 4, you went from 1,000 users to 5,000 users by using the same techniques and strategies that you used before. You just doubled down on it. Maybe there's some paid acquisition there as well as organic, and you have found something that you can replicate again and again to increase the absolute number of users and also improve your engagement metrics. You come and pitch, I might say, okay, that's great. You've gotten from 1,000 to 5,000 in a month. Now I'd like to see what you can do in 1 more month. So go out, do your thing, come back in another month. So that means you're 5 months out of the gate. In that month, I'd like to see some momentum. So if you went from 0 to 3 months, you got to 1,000 users, and in 3 to 4 months, you've gotten to 5,000 users. I want to know in month 4 to 5, how many users can you get to, right? If you get to 5,000 users, that could be fantastic. If you get to 10,000 users, that'd be even better. If you get to 15,000 users, it'd be incredible, because now you can demonstrate to me that you figured out a way to replicate something that has worked, and you continue to optimize it, and you keep building some momentum behind that technique, and it's increasing your user base. So if I think that you should have been able to get to 15,000, but you only got to 7,000, I may not move forward with the deal, right? Because in my mind, well, in month 3 to 4, you got to 5,000 users, from 1 to 5,000, but from months 4 to 5, you only got from 5 to 7,000. I might feel like, something didn't really work, right? Now, you could have a valid explanation for that, and perhaps we still move forward. So a lot of it is just really contextual, and it always comes back, at least for me, to what I said earlier about that relationship that you, the founder, and I develop, where I could say, all right, you know what, you only got to 7,000, but that's good enough. All right, I might decide to invest. In other cases, if that relationship isn't that strong yet, I might be like, well, I'd really like to see the 10,000 before I make a commitment. And if you are a B2B customer, I might say, well, close one customer, right? Get a contract signed with one customer, and I'll write a check. So again, sorry, these aren't absolute numbers and metrics that I look for, but I'm just trying to explain why myself or other investors might have moving targets that entrepreneurs are trying to hit on a regular basis, and sometimes they're not hitting the target, and this is why. Because in a lot of cases, investors, they change their minds. Things change. You might see something in the market and say, that's the new normal. And every other startup that starts pitching you now needs to hit that new normal before you'll even consider them, right? So all of this is organic. It changes over time. At some point, if you've got questions, if you've got comments, if you're an angel investor and there's certain things that you look at, I'd love to hear your thoughts on what are some of the things that you care about when you're looking at a startup. Please share them in the comment section below. Thanks again for joining me. I hope this was helpful and useful. I'll see you again next time.